very big
Thank
changes,
you very
sir.
much.
Thank you very much.
Shri Anil Desai.
Sir, in the late 90s, when the insurance sector was opened up for private players, the Insurance Development Regulatory Authority, that is IRDA, was created to regulate the insurance sector. In the year 1972, insurance business in India was nationalized by late Prime Minister Mrs. Indira Gandhi. Since then, the state-owned companies enjoyed monopoly till the private insurance companies emerged on the insurance sector. Under the IRDA Act, 26% FDI shareholding was permitted in private insurance companies. Now the government has moved Insurance Laws Amendment Bill 2015 to increase the foreign direct investment cap from 26 to 49%. The expectation from the enhancement of the limit to 49% is that it will increase the inflow of FDI that will boost the economic growth. Sir, insurance in India, especially in life insurance sector, involves small savings. It is mainly life insurance that permits long-term investment of the premiums collected because reimbursements would be made generally after long periods, except in cases of accidental deaths. Life Insurance Corporation was formed by an Act of Parliament with the objective to create higher level of confidence in the minds of the people so that life insurance seeps deep and wide. Particularly amongst the small income segments of society in rural India, thereby large amounts of investment funds were expected to be collected, and fortunately expectations got realized. So by the end of financial year 2014, LIC enlisted more than 30 crore of policyholders and generated more than 16 lakh crores of investable funds. Even the central exchequer was paid handsome dividends and taxes without any operational support from the government. Due to its noteworthy performance and efficiency, LIC today commands more than 75% share in the premium collected. This is indicative of LIC serving small income policyholders more than that served by the private insurance companies. It has been observed that private insurance companies confine themselves to the higher income segments of the society. LIC's success story can be gauged from the fact that it has extended 1.5 lakh crores by way of loan to the Indian Railways. It is only because of their robust financial strength which they have built over the years. The service efficiency of LIC is indicated in more than 99.7% settlements of the maturity claims and more than 99% of death claims. Further, private companies often mislead customers. The proof is that more than 1/5 of the policies get lapsed after the first premium is paid, because the insured persons soon realize that their insurance product sold to them does not meet their requirements. Private insurance companies have a high rate of policy lapses ranging from 36 to 51%. It amounts to callous playing with the money of the hapless investors in the private insurance sector. In case of LIC, hardly 5% of the public policies lapse. When it comes to settlement of the claims, claim rejection rate of private companies is more than 11% compared to 1% in LIC. It is because of the very low level of public confidence in the private insurance companies that in the year 2012, more than 800 branches of the private companies got closed due to non-performance. Enhancement in the FDI limit from 49% assumes that there is lack of funds in this sector. This assumption is baseless. Private insurance business is in the hands of high-end business houses, and also insurance business has no link up between investment and volume of business. As rightly said, if you compare the examples of private insurance companies and government-owned companies, I mean capital and reserves which have been brought by the private companies compared to what penetration they have done by procuring premium is much more in the public sector you will find than in private companies. Further, insurance penetration and density depends on the growth of the economy, which can very well be gauged. Today, if we are having the penetration to 3.78% or 3.9% or something, it is compared to the US or the developed countries. We are far near, and ever-growing economy of India, if you happen to see, with the demography of Indian insurance, we can definitely prove far better in time to come. Sir, similar is the case in general insurance sector also, where all private, all government-owned companies are doing exceedingly well. Even general insurance corporation, which is looking after the reinsurance business, is also doing well. If you happen to see, because whatever way they are doing the urban business, they are looking after the rural business also. In rural India, the services given by the state-owned companies are exemplary. And if you see the private insurance companies, they desist to go to the rural India, because rural non-traditional business is something that government schemes which are to be propagated, which are to be given to the people of rural India. And rural economy is really, today it is built by the state-owned companies, not private insurance sector.
Thank you.
But sizable, another important point what I would make is that lacks of employees involved in the state-owned companies who have toiled hard to build this insurance edifice. Before I conclude, sir, however, in support of the bill, I would appeal to the government to consider the employees' plight in the insurance sector, as lacks of insurance employees foresee an onslaught of the private companies on their hard-earned business in the absence of level playing field, which is to be ensured by IRDA. And I think IRDA will ensure that level playing field, so that healthy competition will pave way for the growth of the economy. And
Mr. Naresh Gujarat.